Finding the right down payment assistance program can be a valuable resource for many homebuyers, whether you're a first-time homebuyer or looking to upgrade. We've done the research for you and have outlined the top 10 programs that you need to consider as a homebuyer. In this video, we'll explore how these programs work and the ways they can support your journey to home ownership. Down payment assistance programs come in various forms: grants, forgivable loans, and deferred loans. Grants are typically non-repayable funds that can significantly reduce your out-of-pocket costs. Forgivable loans are loans that may be partially or fully forgiven under certain conditions, such as maintaining home ownership for a specific period. Deferred loans may have deferred interest payments for a certain period, allowing you to save money in the short term. These programs are offered by a variety of sources, including the federal government, state and local agencies, and even private lenders. Programs that assist with your down payment can be a valuable resource for home buyers. However, it's important to understand that these programs often come with specific eligibility requirements and limitations. There are some important restrictions you need to know about. Let's break down the most common ones. First, income limits. Most programs are designed to help individuals or families with low to moderate incomes. Your household income usually needs to fall below a specific threshold, which is often determined by the area median income for your location. You're allowed 80% typically of area median income for most programs. Next, credit score requirements. Most programs require a minimum score, typically between 600 and 620. However, in most cases, you'll need at least a 640 or higher. Location matters too. Some down payment assistance programs are only available in specific regions, like certain states, counties, or cities. In some cases, the home must be located in an area designated for revitalization or affordable housing. Make sure the property you're considering is in an eligible area. Then, there's the first-time homebuyer status. Many programs are designed specifically for first-time buyers, meaning you haven't owned a home in the past 3 years. However, some programs may allow previous homeowners in certain situations, for example, those who have recently divorced or are buying in a rural area. Loan type also plays a role. Certain programs may only be available for specific types of loans. Conventional loans may not be eligible for these programs. Now, let's talk about your debt-to-income ratio, or DTI. If your DTI is too high, it may prevent you from qualifying for these programs, as they want to make sure you're not taking on too much debt. So, what exactly is the DTI ratio? The DTI ratio is a personal finance measure that compares your total monthly debt payments to your gross monthly income, your income before taxes and deductions. It's expressed as a percentage of your income that goes toward paying off debt. To calculate your DTI ratio, use this formula. DTI ratio equals total monthly debt divided by total gross monthly income, then multiplied by 100. For example, if you have $1,200 in monthly debt payments and your monthly gross income is $4,000, your DTI ratio would be 30%. While many conventional loans have an upper limit of 43% for the DTI ratio, most lenders allow a ratio anywhere from 45% to 50%. Keep in mind that each program or lender might have different limits. Most programs also have an occupancy requirement, meaning the home must be your primary residence. You can't use down payment assistance for second homes, vacation properties, or rental properties. And don't forget about property price limits. Some programs will only help if the home's purchase price is below a certain amount, ensuring the assistance is going toward more affordable homes. Repayment terms vary as well. Some programs offer forgivable loans, meaning you won't have to pay them back as long as you stay in the home for a set number of years. Others may require repayment if you sell or refinance within a certain period. Some programs offer special assistance for individuals working in certain professions, such as teachers, healthcare workers, firefighters, and law enforcement officers. And of course, the amount of assistance you can receive may be limited, often based on the size of the loan or the home's price. Some programs might cover a percentage of the down payment, while others have caps on how much you can get. Finally, some programs may come with extra requirements or conditions, such as completing homebuyer education courses or demonstrating financial hardship. Be sure to carefully review the details of each program before applying. While down payment assistance programs can be a valuable resource, it's essential to carefully review the eligibility requirements and restrictions of each program before applying. Now, let's explore some potential drawbacks of these programs. These programs often come with slightly higher interest rates compared to traditional mortgages. For example, if today's federal housing rate is 6.5% and the conventional is 7%, a down payment assistance program might offer a higher rate, like 7.25% for federal housing or 7.5% for conventional. Importantly, you usually can't negotiate lower rates using seller concessions, which is a common practice with regular loans. This could end up costing you more in the long run, so be cautious. The second drawback is second lien on your property. If the program covers your down payment, it's often added as a second lien on your home. For example, if the program covers a $10,500 down payment on a $300,000 home, that $10,500 becomes a second lien. You need to be careful, because if you sell the home within the next few years, you'll likely have to repay that lien. Make sure you fully understand the terms of the program, including the repayment requirements and any potential penalties for early repayment, before making a decision. Now, let's take a closer look at 10 of the most popular down payment assistance programs. Starting off with Chenoa Fund. This program offers up to 3.5% for Federal Housing Administration loans, making homeownership more attainable. The down payment assistance comes in two options, a repayable or a forgivable option, both with fixed interest rates for the life of the loan. In order to be eligible for this program, the minimum credit score required is 600. There are no income limits, so this program is available to a broad range of buyers. You must complete homebuyer education and make on-time mortgage payments to receive forgiveness. The Chenoa Fund Down Payment Assistance Program is a valuable resource for many homebuyers, including first-time homeowners. It offers flexibility by not requiring first-time homebuyer status for eligibility. Coming in at number 9 is the National Homebuyers Fund. Offers up to 5% of the mortgage amount as a grant with no repayment required. This program is versatile and can be used with Federal Housing Administration, Veterans United, single-family housing, and conventional loans. To meet the eligibility requirements, you'll need a minimum credit score of 640. The home must be your primary residence. This program is designed to help a wide range of homebuyers, including both first-time and repeat buyers. Next up is Freddie Mac BorrowSmart program. This program provides up to $2,500 as a grant, and it's available nationwide for first-time homebuyers, and the funds are not in the form of a loan, so you won't have to worry about paying it back. This program is available nationwide, but it's specifically for first-time homebuyers. To be considered for this program, the purchase must be for a primary residence. The program requires pre-purchase counseling with a specific provider. If you're looking for some financial assistance to help with your first home purchase, the Freddie Mac BorrowSmart program can give you a great head start. Following that is the Fannie Mae HomePath Ready Buyer program. It covers up to 3% of the home's purchase price for closing costs, and it doesn't need to be repaid. However, this program is only available for Fannie Mae HomePath properties. For eligibility under this program, you need to complete a homebuyer education program, have a low or moderate household income, Be willing to close on the HomePath home within 60 days. Use a real estate agent to present your purchase offer. The program is available to first-time homebuyers, repeat homebuyers, and even real estate investors, so you don't have to be a first-time buyer to benefit. Now let's look at the Wells Fargo Neighborhood Lift Program, offering up to $15,000 in assistance with no repayment required, so it doesn't need to be repaid. To qualify, your income typically needs to fall between 80% and 120% of the area median income. Also, the home must be located in a target area where the program is available. Here's how it works. You must be purchasing a primary residence. You must complete an approved homebuyer education program. The program is forgivable over 3 years if you remain in the home. This means you could potentially receive up to $15,000 in assistance if you live in the home for over 3 years. In 6th place is the Bank of America Down Payment Grant Program. This program provides up to $10,000 with no repayment required and is available for low to moderate income buyers. However, to participate in this program, the property must be located in specific markets where the program is offered. Your income typically needs to be around 80% of the area median income. The grant must be used for a primary residence. One notable feature of this program is that it doesn't require you to be a first-time home buyer, allowing both new and repeat buyer can take advantage of the funding. Coming up next is the Federal Home Loan Bank Affordable Housing Program. It offers $5,000 to $10,000 for down payments and closing costs, and it doesn't require repayment. To qualify, you must meet income eligibility requirements. Low-income families with incomes no greater than 80% of the area median income. Very low-income families with incomes no greater than 50% of the AMI. Funds must be used to purchase a primary residence, and borrowers must go through a participating member financial institution. Additionally, completing a homebuyer education course is required. But don't worry, these courses are straightforward and not time-consuming. Next in line is the Good Neighbor Next Door program. This program offers a 50% discount on housing and urban development home prices for eligible professionals such as teachers, law enforcement, and firefighters, and it doesn't need to be repaid. To apply successfully for this program, commit to living in the home as your primary residence for at least 3 years. Purchase a home in a designated revitalization area. Qualify for a standard mortgage, such as a conventional or Federal Housing Administration loan. At number 2 is the USDA Direct Loan Program. A great option for low and very low-income buyers in rural areas, this program offers 100% financing and even subsidizes part of your mortgage payment, making it an excellent option for low and very low-income buyers. To meet the qualifications of this program, borrowers must meet specific income limits, which vary by location. Typically, your household income cannot exceed 115% of the area median income. The home must be your primary residence. If you're open to rural living, the USDA Direct Loan Program could be your path to affordable home ownership. And finally, in the top spot is Neighborhood Assistance Corporation of America. This program is a game changer for many first-time homebuyers, eliminating traditional barriers to home ownership. With no down payment, no closing costs, and no private mortgage insurance, it's designed to make home ownership more accessible and affordable. However, it's important to note that this program can be time-consuming and requires dedication to complete the process. But if you're willing to invest the time, this program could save you tens of thousands of dollars on your home purchase. And there you have it, 10 down payment assistance programs that can help you on your home ownership journey. Remember to carefully review the eligibility requirements and explore these options. Contact a local housing counselor to discuss your eligibility. Thanks for watching. Until next time, Good luck on your home ownership journey. Don't miss out. Like and subscribe for more.